What's up, members? Welcome to another lesson. Just a recap from the last lesson. We were looking at market structure, market direction. So we looked at bearish type of momentum, bullish type of momentum, and a ranging market. So today we want to actually understand why or what moves the market, or why does the market behave the way it behaves? Why does the price go up and why does the price go down? That is actually why we are here, and what we are going to learn in this video. If you do have any questions, please be sure to drop the questions in the comment box below, and I'll be able to do a video for that. And maybe we can also meet in other Zoom sessions. So, right, remember, Forex is a business. I always say that whenever you are trading, you have to look at the Forex charts as the price of the commodity that you're trading. In this case, this is gold, which means this is the market for gold. And then the code currency for this one is Euro, is USD. In this case, whatever the numbers you see this side is a price for this kind of commodity, right? So if we look at gold on a 1 month time frame to see how it has been sold, this is actually a record from 2000 and yeah, let's say 2006. Gold was least sold at 550,000 US dollars, and then the highest high of gold was 20,090, right? So in this case, what you have to know is that whatever price that you're trading, whatever commodity that you're trading or asset, that thing, if you trade it based on the price, you're actually going to increase your chances of making profits out of it, because most people, they just trade without paying attention to these numbers, because these numbers are the ones that will tell you logically, even in real life, you know that you need to buy something when it's cheap and you need to sell something when its price is high. That is the logic. So there is always this principle of demand and supply, right? Demand and supply is what moves the market. When demand is very high, price of the commodity goes up. When supply is very high, price of the commodity goes down. In this case, you can see that there was so much demand. Of people wanting to buy, and then because of let me say in this case, there was so much demand of people wanting to buy. As a result, price kept on going up, kept on increasing up to this peak from from 2009 to 2011. Price of this 2012, price of this commodity went up so drastically, and you can also see that at this moment people started selling because there was a lot of supply. Price started going down, right? So if you're going to understand this principle and use it as you are doing as you're taking your trades, it's going to help you to minimize chances of making mistakes whenever you're buying or you're selling. Same thing happened here. You can see that there was so much demand of people wanting to buy, and there's so much demand of people wanting to buy as well. As a result, price raised. But there's this one thing that will always give you a signal, that will always tell you that a lot of people are looking forward to, or the question should be, why is this place called why is there so much demand at this point, or why is there so much demand at this point? Why is there so much demand at this point? And then we always look to the we always look on the previous price of the commodity, what was happening in the past. If you see really in the past, this price had to be sold for a couple of times, like here. If we define a candlestick, it's just a graphical representation of price over period, over time, I should say. So you can see that there was a lot of time whereby this commodity was being sold. Let me just zoom this out so that you can be seeing properly. Yeah, so you can see that there was a lot of time whereby the price of gold was just bouncing around a confined area. So that is your demand area, because most people are looking forward to, if the people are looking forward to start buying, they would be like, okay, let's wait for this price of this commodity, because at this moment, let me say at this moment it was 682. Let's wait. Okay, let me take it this way. At this moment, the price of this commodity is 670. Then the price had to rise. And then people will be like, no, we're not willing to start buying right now because the price is a bit expensive. We would like to start selling. We would like to start, we would like to wait or start selling, because a lot of people are not willing to buy. Price is not going to go up. Like, there's less demand as a result. Because of less demand, people are going to be tired. No, we've been tired holding this thing. I think it's not going up anymore. Let's start selling. Because people have started selling, a lot of people going to start uh, a lot of people are going to start selling the thing. As a result, when the supply is very high, demand, the price goes down. So you can see that price has come down here. And then on the other side, logically, people will be like, oh, price now is back. Price is now back in the zone where we were trading last time. You can see that price is now back in the zone where we were trading last time. Chances are very high that, or people would say, I think now this is a good idea to invest in gold. And then it's not only you who is looking at that area. So many people are looking at that area. And then people come and start what? Buying. People come and buy, put their own money and all stuff. As a result, price is going to shoot to the upside, start pulling 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 to the upside. So crazy, like what you have seen. Why? It's because of the concept of the demand zone. The demand zone is actually the zone that everybody is just interested in investing. Everybody is just looking at that area that maybe they would want to put in their money. Or a very good example is here. Why is this a demand zone? Why did so much people come and start buying here to make the price go up? That's when you go back just to see what happened in the past. You would see that at this area there was 4 months, like 1 month, 2 months, 3 months, 4 months. There was 4 months of price just bouncing at a specified area. In the other hand, this can also be a demand area. On the other hand, let me be doing this. This can be the demand zones, even this one, and then even this one as well. But I would love to put this so that if you were to look on the other side, it would make sense, right? So these are demand areas because price is actually taking time, right? If you were to see what is happening on the other side from here, you would see price has actually respected this demand zone. As a result, price is going up. On the other hand, you would see this area, right? Price is actually respecting that area because it's a demand zone from the other side. On the other hand, you can also see the same thing happening. And on the other side, you can also see the same thing happening. It's why? Because it actually looks like a demand zone. And when you come here, you also see that price actually rejected this area, is actually doing something on this area because it's a demand zone. And lastly, you would also see the same thing happening here. Why? Because it's a demand zone. And we don't know. This place might also be the same thing, a demand zone, a demand area. So I'm pretty sure you guys are understanding what I'm talking about, right? So if you haven't understood, just make sure you revise the video and understand, because I want to move forward. So in this case, let me go down to a smaller time frame so that we can see what's happening on a smaller time frame. Because everything that I'm talking about is going to exist on every time frame, whether being a 1 minute time frame, a 4-hour time frame, a 6-hour time frame, a whatever time frame, things are going to always happen. So the same thing here, right? What has made price to go up, what has made price to go up and price to go down, right? We as traders, we need to make logical decisions whenever we are investing in this kind of financial markets. We don't just have to buy because some indicator is saying let's buy, or because something or people are saying let's buy, let's whatever. We need to make some logic. We have to be like we are the ones that are making the investments, right? So the same thing happens. As I was saying, you can see that this is the highest price of this commodity, right? And then people started selling because there was nobody willing to start buying. Why? It might be maybe the commodity is too much expensive. It's too much expensive because there's nobody willing to buy. Price couldn't keep on going up. As a result, people started releasing. Just take this business as I always say this, give an example of soya beans, maize. It's actually the same thing. Just put it here. Put maize here and then put the kwaja. Just the way it happens. The sake of growing maize, or the sake of doing agro maize business, right? There will be a time whereby maize will be sold at a very expensive price, 18,000 or 15,000. And then there's that price, it cannot go beyond that because nobody's willing to buy. And we're also going towards the new season. As a result, people start selling, and then maize is going to get cheaper. Now everybody has invested, everybody has maize, everybody has maize, everybody's selling, the price is going to drop. Okay, but there's always that place where maize, even though maize is going to be cheap, but maize will never go below that price. And then this is the area, right? This is the price. In this case, I'll just give an example. This is the price, 18,000, whereby even though maize is going to be cheap, but it will not go beyond that area, right? Like you can see, a price came here and then it started going up again because people are willing to, they know that once maize gets cheaper at this stage, let's buy more because we can buy and hold, sell it when it's expensive. That is why you see most people will start buying here so that they can sell when the price is at a peak. So the whole essence of this thing is to make you understand that in the Forex market, you need to make logical decisions. You have to take a calculated risk, know that even though I am buying here, but chances are very high price might continue going down. Even though I might sell here, price might, chances are very high that price might go up. Or even though I'm selling here, but let me just hold for a few hours or for a few minutes or for a few days because it looks like price might behave crazy, right? So normally, so the question should be, how would you identify a point of demand or a demand zone or a supply, right? So this video is actually talking about demand and supply, right? So a demand and supply is actually just a point where the market reversed. Okay, I'll start from here. Okay, demand and supply is actually a price where the market reversed, or where when there's demand, that means a lot of people willing to buy, and when there's supply, that means a lot of people are willing to sell. I shouldn't go into technical terms, but I'll take it in the Forex industry. So yeah, I would say in this case, this is a supply zone and this is a demand zone. This is a supply zone, demand zone, supply zone, demand zone. And okay, let me take this out. Let me take this out. And then, okay, let me also take this out. Okay, so let's say in a bullish momentum where price is pushing to the upside, price is pushing to the upside, right? You will notice that you just take your tool, like let's take this tool and put it here, right? And then take your other tool, put it here. And then on the other hand, this is actually like where the market has reversed, right? And then this is actually where the market has reversed. just try to extend that area to the other side here, right? And try to extend this area to the other side. You will notice something that these things have in common, even where even here, right? You will notice that these prices have something in common, why they are reversing. That is a demand zone. And then how do these demand zones look like? Because one would know that this is a demand zone by just looking at the previous price, what happened in the past. So a very good example is actually on this one, right? You see price started coming up and then it came down here and then it came up here. I would say, let me just remove all these things. Let's do the same thing. Let's put this, right? And then let's bring this thing, see what's happening inside, right? What do you see? What do you see here? Here, you will see that price has actually bounced around that area for a particular period. The same thing, let's come here, right? And then see what's there, right? The same thing, price is actually doing something. It's taking time. It's actually taking time, creating small candles, a lot of small candles. And then the same thing is here, right? Let's see what happened on the other side, right? What's happening on the other side? Same thing, so many candles doing crazy stuff, right? Like this candle is actually telling you that price, actually just telling you that there was a lot of indecision. A lot of indecision was like, should we go up? Should we go down? But should the prices go up? But even if the prices go up, there's no one willing to buy. Should the prices go down? But even the prices go down, no, we don't have to release now. Let's keep on holding. And then, no, we can't do it anymore. Let's just let people start buying or start selling. That's exactly what is happening because investors are actually fighting the bulls and bears, right? Or even if you bring this here, right, you'll notice that there's something here. There's something here, right? There's something here. There's actually indecisive in the market where people are asking each other, should we buy? Should we sell? What should we do? Like it's taking time. It's taking time. Even here, you would see that there will, even here, you would see that there's something that is going to happen in the future, right? If you extend this line, you will see that price has actually behaved somehow, or price has actually respected this area in the future. Why? It's because there is so much indecision taking place. You can see here, right? And then unfortunately price broke, and then yeah, you can see what happened here, right? Price came here and then it started going up. Let's keep on going and see what happened, what kept on happening. You can see price was actually just coming in this place because that's where indecisive is coming in, because people are just doing these things because based on what has been happening in the past. Same here, you can see. And then if you keep on extending it, you would see that prices keep on doing something, like keep on taking time in these zones. You can see the same thing. It's the same thing, you know. The same thing happened even now. You see why? It's because those areas where the market is taking so much time to decide whether to go up, to go down, you have to pay attention to those areas, as you can see, right? So these areas are what we call the demand and supply zones. So we as traders, our duty is to stay in the charts, in the forex charts, and just to observe where these demands and supply zones are happening. In other terms, we call them order blocks, right? We call them order blocks. So your duty as a trader is just to identify order blocks. In this case, this is a very good order block. So for you to identify an order block, the order block is close to the where the price has reversed, like here, price has reversed here, and an order block should be where the market took so much time. So this could be an order block, and this could be an order block. So in this case, you have to pay attention that price might come in this area in the near future. And then that's where you need to start making decisions of buying or selling, right? So the same thing, it's here. You have to pay attention to this kind of things, right? Where price is actually taking time to decide whether it go up or go down, right? You will see that price that's where you have to pay attention to in the future, because that's where price is going to, that's where you will know whether price is going to go up or go down. Okay, I'll not do anything here, but okay, let me keep on moving forward. Okay, so without wasting much of the time, let me just give an example of the trade that I took, um, this week. It was actually a very beautiful trade, and I really enjoyed it. Yeah. So, yeah. So this trade actually started here, right? It actually started here. So don't forget the concept that I've taught you about the structure creating higher highs and higher lows. So it was this thing. Yeah. Remember, we learned about, I did a video about structures, highs and lows. All right. So what happened is that I took a trade exactly here. It was based on supply and demand. So in this case, price was somewhere, it was somewhere down here. Yeah, price was somewhere down here. And I was looking at this area, right? I was looking at this area and I knew that, let me just go on a 1 hour so that it would make more sense. Okay, good. And then price was in this area. So I was looking for my surprise zone, right? My surprise zone where I would want to be to start selling. So in this case, I identified this area, right? I identified this area and I brought my stop loss, right? Like this. So I was actually looking forward for price to come in this area. That time the price of the commodity was here, and price did actually came down here, and it came exactly in my order block. In this case, I took a sell, and as soon as I took a sell, let me just look for the picture of the sell, the nodes, and okay, where are you? All right. Okay, I've got it. Right. Just wait a minute. Photos. All right, yeah, that's exactly what I'm talking about. I was expecting price to come in this zone. As a result, price came here, and as soon as it came there, see what happened. Price came here and started pulling to the downside. That is exactly what I'm talking about. A very good example, it's because you see here, I was looking at this area whereby price had had bounced back, made indecision multiple times. That's how you identify an order block. The same area, the same thing is here, but I wouldn't give an example of this one. Yeah, you see this trade, it was actually a successive trade, and I really enjoyed everything about the trade. And yeah, and another good example is what you are seeing here. I identified this as a zone whereby the market actually came and exactly tapped me into the buy, and we took a buy, a very nice trade, and it was really great. I wouldn't give so many examples, but let's get back on the charts. So I hope you guys are understanding the concept. So now let's get back to our charts. So yeah, I was looking for price to come in this zone so that I could take a sell, and I actually took a sell, and I was very excited with everything about it, and my stop loss was very tight, and my take profit was actually down, was actually here, and that was very interesting. So you can see it was a very profitable trade. So your duty as a trader is just to identify these zones. So a very good example is you could identify this area whereby price could come and respect. As you can see, the same thing actually happened, right? As you can see, price came in this zone, and then as you go up, you'll see so many areas where price is actually coming and making making you take advantage of it, right? So that's the whole concept of identifying order blocks. So if you have understood everything about order blocks, this is going to be the easiest thing that you can do every day, because whenever you open your charts, you're going to be able to know that this is your order block and this is not your order block. Like you can see here, if I identified this is my order block, this is actually an order block that I identified today. So you can see what price did. It actually just come in that zone and took you up. So you need to understand, make more practice, because it's not that every order block that you are going to identify is going to play out, but just make sure that you identify the least order blocks, the least order block that you can find um, on your chart. Like you can see, they're going to be plenty of order blocks. A very good example is this order block, right? This is a very nice order block, but you see what price did? It actually broke and went to this order block up here, right? So it's not that every order block is going to be respected, but just make sure you find the least order block. The least order block you can find, like you can see, this is another order block, but it was violated, it was broken. People were not satisfied that no, this is not, we can't start selling now. Let's keep on buying, right? So that's actually what I'm talking about, right? You can see here, this should be the valid order block. This is another order block, right? Price could have come and reversed in this zone. Actually, I was looking forward to start selling in this zone, but it did not happen like that. So it's not every order block. And in the near future, we need to pay attention to this area, because this could be our potential order block, or this could also be our potential order block. So sometimes identifying order blocks is going to be hard for you, but I'll give you a clue. If you can't identify these order blocks like this randomly, just make sure that I'll give you an example of, you see, this is, okay, let me give an example of this, right? Let's say you're going down, right? You're pushing down. This is a negative, bearish candle, bearish candle, bearish candle. And then within the bearish candle, there'll always be this candle, the green candle, right? This green candle. Like it'll be like this, right? And then there'll be another bearish candle, right? There'll be another bearish candle, right? So the last candle, if it's a bearish, the last candle that's green, that is your order block, right? Just identify this area as your order block. Price, no matter what, it's gonna come in this area and then that going up. Just identify this place, right? And so I'll also give you an example. If I can do that, that would be cool. And then let me also give you another example of identifying an order block when price is going up. Let's say price is actually pushing to the upside, green candles, and then there'll always be that that red candle that will pop up like this, and then that last red candle, and then you have this green candle or this green candle, right? No matter how many candles, but this last candle, right? That's your area of interest. That's your order block, right? And you have to pay attention to those order blocks, because that's where you see price coming and giving you so many things. So in this case, I'll give you an example of you can see that this is a bullish momentum. You're seeing blue, 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 blue. And then the last candle we are seeing is blue. The previous candle is this one, the red one. So in my case, I would come here and say, this is my order block, right? this is, oh, sorry. Here, this is my order block, and I would pay attention more to this area. But it's not always that these order blocks are going to be respected, but this is the strategy that you can use because it's actually helpful. Or a very good example is um, let me say, um, let me give an example. See, I'm actually searching for a very perfect example, but if you can consider that, that would be cool. But I personally don't use that. I just see, let's say here, this is actually self-explanatory. It's telling me that check out in this zone. You can see here, just check out in this zone, right? Why? Because price is actually doing crazy stuff. Another good example is just check out in this zone, right? You see why? You see here, you see here, you see here, because that is actually what we call an order block. And I'll also explain the theory behind these things in the next videos. You can see what happened. I'll explain the theory behind it in the next video, why these things happen before the market launches. Why doesn't the market just start going up? Like you can see here, why is it that the market is coming and doing these things here before it just, why doesn't it just like here, why doesn't it just pop to the downside, but doing this thing? So that is actually what we are going to look at in the next video. But in this video, I'm pretty sure you guys are going to pay attention to identifying order blocks and understanding order blocks. So you can see, as a very good example is this one that I was just saying, this is a bearish candle, and then we have this blue candle in the bearish momentum. This last blue candle, if you pay attention to it and do this, you'll see that this is your legit order block. You can see what's happening on the other side, right? You can see what's happening on the other side. So another good example is this late candle here, right? It's actually a late candle before the high, the most highs. If you see what's happening, you see that in this area, price is actually bouncing around, respecting this area. So we need to also to consider this area as a point of interest. Another very good example is this is an order block, right? You see what price did. Another one is this is an order block, right? But not every order block is going to play out, but there are specific order blocks that we are going to consider. So in this case, there is this blue candle, right? This should be order block, right? So yeah. So today's lesson was just it was just all about understanding why the price goes up, why the price goes down, and understanding the logic behind the price movement. So as I've said, as price is going up, there's going to be this area where price is actually reversing, Pay attention to this area, see what's happening. Just observe every place where the price is actually reversing and pay attention what is happening. That is actually a point of interest, right? Because everything is something is going to happen. Price might reverse or price might go up. So we as traders, we don't pay attention to what price, let's say in this case, we learn from the past, from history, because history repeats itself in the forex market. So we take advantage of what's happening in here so that we can plan for the next move. So in this case, let's say this trade is actually now here, and then it has come here. And then you as a trader, you have to know that where this might reverse, right? Where this might reverse, will it reverse here or will it reverse here, right? You have to know. And then that's where your order block is, right? So remember, last time I also talked about breaking of structure. We were doing something like this, whereby the market was coming and breaking the structure. So I said that wherever you see price breaking a structure, just know that we are still in that kind of momentum. We are still pushing to the upside. So I'll just give you a small example of you would see price has actually broken the structure, which is telling us that we are still pushing in the same direction. We're just buying, right? Price is actually breaking structures, creating new highs, which is telling us that we are still going in the same direction. So in this case, you can also see that um, price is not breaking the structure on the up or the down on the downside. Price is not breaking structure on the downside. Here, not breaking structure on the downside, but only upside. So if price is only breaking structure on the upside, just know that we are pushing to the upside. But if price comes and breaks structure on the downside, just know that we are now going down. A very good example is this, right? Let's say here, we're actually pushing to the downside, upside, then another structure been broken here, another structure. Okay, yeah, and then it failed to break this structure. It failed to break this structure. Instead, it broke a lower low. So in this case, this is our lower low. So we are taking this lower low because it is the one that failed to break this structure. And then as soon as price has broken this structure, we just know that price now has changed direction. Instead of going up, now we are going down. That is why now we have started creating new highs, and then we keep on breaking to the downside, right? We keep on breaking to the downside, just like this. And then because we keep on breaking to the downside, we keep on breaking to the downside, and here we also broke to the downside. And then what happened next? We created a new low. We created a new low, and why did the price break? It broke to the upside. What is it telling you? Now it's time to start looking for buys. As a result, as soon as price broke here, we now look for our possible order block. And then you see price keep on breaking on the upside. As a result, yeah, just keep it simple like that. Just keep it simple like that. We need to trade with logic. We don't just have to make decisions based on what we are saying, based on what we have heard or whatever, but we have to make logical reasoning whenever we want to invest, because we are traders, we are investors, and we must be sure of what we are doing and what is gonna come out. We don't just have to press a trade and be like, I don't know what's gonna come out or how it's gonna be like, or I don't know where to close. But we must be people who can calculate that if I enter a trade here, I'll be able to exit it somewhere, or I'll be able to do this, I'll be able to do that. Otherwise, guys, thank you for um, thank you for um, coming back to watch this video, and hope to see you in the next one. Have a good day.